Thank you for watching our odds explainer video. In the video, we'll go over how the odds are calculated, how they can be used in trading, the different odds timeframes, and a few tips on when odds are likely to be less useful. Firstly, our odds were created to answer one simple question. How has a specific stock or crypto performed in the past after moving a specific percentage amount? Going over an example is the easiest way to understand the odds and how they're calculated. Let's go over Tesla's one-day odds. As we can see here, Tesla is up 1.3% today. In order to calculate the odds and the data on the graphs below, we look at all of the days since 2010 that Tesla has been up 1.3% at some point during a trading day. And we calculate what would have happened if on each of those days you would have bought Tesla when it was up exactly 1.3% and sold it at the close of the following trading day. So for example, on February 24th, 2022, Tesla was up 1.3% at some point during that trading day. If you had bought it when it was up exactly 1.3% and sold it at the following day's close, you would have made a return of 4.6%. This is just one of the 1,598 times in the past that Tesla has been up 1.3% at some point during a trading day. Every single occurrence or day when Tesla was up 1.3% at some point during a trading day is shown here in the All Occurrences section. The graph below summarizes the returns you would have earned if you made the same trade on each of those 1,598 days. On the bottom here, we can see that on average, you would have made up 0.2% return. On the trade where Tesla continued to go up the most, you would have earned a return of 24.9%. And on the trade where Tesla reversed and went down the most, you would have lost 27.6%. Up here, you can see that 52% of the time, you would have made a profit on the trade, and 48% of the time, you would have made a loss on the trade. The bars below show you the amount of times that your return would have been between the two numbers on either side of the bar. So for Tesla, it means, for example, that 109 times out of the 1,598 times, you would have made a profit of between 5 and 10%. The bars are sized according to the amount of occurrences that they represent, so you can quickly get a sense of the distribution of returns. In this case, you can see that the returns are concentrated between -2 and +2%, and that the 52% of the times it traded up versus the 48% of the times that it traded down is almost 50-50. Most stocks on most days will look something like this. However, some moves for some stocks produce a more skewed distribution of returns. A good example would be DOCN. Historically, on days where DOCN is up 7.8%, 70% of the time you would have made a profit by buying it and selling it on the following day's close. And you can see here that a lot of the returns following this 7.8% move are concentrated between 0 and 10%, meaning that DOCN might potentially be a good momentum stock on days it is up 7.8%. A different example is MBT. You can see here that historically on days when it has been down 9.1%, you would have made a positive return 75% of the time and an average return of 1.2% by buying it at that moment and selling it at the close of the following trading day, meaning that MBT might potentially be a good reversal or buy the dip stock on days it is down 9.1%. With these examples, you can see how our odds can be a helpful data point in helping you find potential reversal or momentum trades. That being said, keep in mind that there are many factors that influence a stock's price on any given day, so you will likely get the best results by using our data along with other fundamental and/or technical data. In terms of timeframes, same-day odds tell you the exact same information, but based on you selling the stock at the same day's close. So this tab would show you the stats if you bought Tesla every time it had been up 1.3% and sold it at that same day's close. 1 week odds is the same concept, but based on you selling at the close 5 trading days later. And finally, the custom odds section lets you choose when the sell occurs. So by putting 20 here, for example, it shows me the performance if I had bought Tesla every time it was up 1.3% and sold it at the market close 20 days later. Finally, it is important to understand when our odds are less likely to be useful. If an earnings release or any other material event with an unknown outcome is set to take place during the time frame you are analyzing on our platform, our odds data will likely be less helpful as the outcome of that event will likely be the main driver of the stock price. Likewise, during days that the market indexes are behaving significantly more volatile than usual, our odds are likely to be less helpful, as the general market gyrations are likely to have a greater impact on the stock's price for that day. That concludes our odds explainer video. If you have any questions or suggestions, please feel free to message us via our 24/7 live chat or send us a message through our Contact Us section.